Hi guys, so today I've got another example of current price action on how you have to approach the market when you see a setup panning out, whether it pans out or it doesn't, but you need to learn how to apply your understanding of the market. Right, so before I start, please forgive me, my voice is not yet 100%. I had tonsils that were messing up with me couple of days back, so my voice might not be really that clear, but I'll try to get the message straight out. So we're looking at Aussie dollar. Right now, when you look at Aussie dollar, we've had this correction here from the highs of when is this that's February highs, right? We've had a nice correction back into demand. We traded above this old high run stops and traded to the downside. See, external range liquidity price is now targeting internal range liquidity, but we haven't seen any signs of say the market wants to now go back to the upside. Now, be that as it may, but there's a potential setup for a what? For a reversal, for a retracement to the upside, most probably to this down up close candle here, which is our bearish order block. There's a potential that the market might find a bit of support inside this bullish order block, right? So what I'm emphasizing here on is, or what I'm trying to illustrate to you guys is how you approach this kind of market, right? Now, we've already seen price dipping into the order block, right? Which is our bullish order block, right? This is the first on this section here. We've got 1 and 2 and 3 down here, right? But this is the first that price has dipped into and found support and moved to the upside. Can you see the rejection of lower prices from when was this? 17th of February. See, 17th February price dropped into the bullish order block. Then buyers push price back up for 2 days, right? And then we have now retraced back to the same level, right? Secondary test. What do you have to consider on the secondary test? You have to consider a run of stops. A run of stops on what price point? An old low, since we are trading into a bullish order block. So now that we have highlighted the criteria that we are approaching this chart, price is now trading into discount, right? Price is trading into discount in the form of a what? A bullish order block, right? So where will be your target? Your first initial target is the point of resistance. The first point of resistance that you're going to get here is this bearish order block, right? This bearish order block is going to be your first point of resistance in terms of price moving to the upside. Now remember, my red line represents equilibrium points of an array. In this case here, we've got a bearish order block and a bullish order block. That's the equilibrium point. So it will be ideal to be hunting for longs on AUDUSD from current price action or from 0.67842. Now, the reason why I'm saying from current price action is because I think we've created a new low. What is the low on this candle here? The low is coming in at, let me just zoom out a bit. The low on this candle is coming in at 0.681. You can't really see the other number there. 0.68106, and the low on the current candle is 0.68102. You see, there's been a runoff stop, so we have created a new low. That is on a lower time frame, guys. On a lower time frame, when price is in discount, right? Discount in the form of a bullish order block. You already have a narrative for you to be a buyer, but now you need to go to a lower time frame. Now we're going to go to H4, right? Now on H4, you can clearly see that this H4, the current H4 candle has traded below this up candle here. That's a run of stops, right? Run of stop in discount. You see, run of stop in discount. So that's a low risk long position that you can take in this current price action. And where are you going to put your stop? Your stop is going to be well below this candle's low, which is 0.67213. That's where you're going to put your stop loss, right? Because you're looking now for a retracement to this bearish order block. But you only do that when you go to lower time frame, right? So we're going to go to H1. So this is H1 price action. And you can see, yeah, of course, this is only the candle that has just opened now, like 26 minutes ago. There isn't really nothing much in terms of showing emphasis for price to move higher. But the opportunity, the, the opportunity for you to be a long trader is this. So you're looking at about almost a couple of, if you are to go long on this asset, you're looking at almost a target of, say, let's say a day trade for 40 or so pips. You see, the moment you get 40 or so pips, then you are now anticipating price to face a bit of resistance inside this daily bearish order block. Now, I'm going to go to the other correlating pairs, right? For instance, NZD-USD, right? So when you look at NZD-USD, this is NZD-USD daily, right? I'm going to go to H4. When Aussie dollar was running stops, the current H4 candle, see, current H4 candle on NZD, AUDUSD on H4 potential runoff stops, right? Below an old low, you see? Meaning it has already created a new low. At the same time, we get NZD-USD returning into fair value, right? Returning into fair value in the form of a what? H4 bullish order block, you see? So NZD-USD is returning to fair value in the form of a bullish order block. It hasn't created a new low, right? It hasn't ran the stops. So the chances of price finding support inside this discount area, they're quite high, you see. Chances of a support level here on 0.62126. You can see price came, traced to the upside, price came, traced to the upside. You see, this is scalpers heaven, guys. Scalpers heaven for those who scalp the market. Now, when we go to say pound USD, right? Remember, these are correlated pairs. Pound USD is also returning to fair value. Fair value in the form of a what? This FVG gap here. You see? Price is returning to fair value for a push to what? To the upside. So expect this daily bearish order block to provide resistance. Now, on H4, you can see this candle here is returning into discount. We've got our liquidity void and our higher time frame discount area here. This is a bullish order block. Price is returning to that level there, and chances are very high that we're gonna see a higher move to the upside. Then we come to Euro USD. Euro USD, we've got our daily bearish order block there. Price hasn't reached that level. I'm gonna go to H4. Now on H4, you can see Euro USD has also ran yesterday's low stops. Okay? Yesterday's stops have been ran, but right now price is also inside this liquidity void here. Chances are very high that we're gonna see a move to the upside. So the reason why I did this short video, guys, is just to show you that there's a potential runoff stops on Aussie dollar, potential runoff stops on Aussie dollar inside this discount area, right? So there's a potential runoff stops inside the discount area. Control C. Just do this. So that's my old low, which has got internal range liquidity of sell stops, and this is our current H4 candle. Now I'm gonna go on to H1 or even 15 minutes. You can see that this is where we traded lower, and now there's a small push to the upside, but for us to really get a clear break out of this range, we need price to trade above this candle's high. But by that time now, you'd have already reached almost 50% of your target, because once price reaches here, it's likely bound to find resistance and push further to the downside. So yeah, that's what I wanted to just illustrate to you on how you have to approach the market. So now the question is, okay, how do we then progress from here, right? If you go long, or if you're anticipating price to move higher, okay, for class purposes, let's monitor this price action for the next 8 or 12 hours for us to really see now how it's going to pan out. You see, that's how you have to approach it, right? 10 out of 10, if you do this, you're going to approach a market where you're going to get, say, 7 trades correct. Because I'm not going to guarantee you, or I'm not going to promise you that this is a really pure stop hunt. I'm only narrating it in the sense that, okay, Aussie dollar has created a new low, New Zealand dollar hasn't, right? But New Zealand dollar has also returned into fair value for longs. Aussie dollar has run an old low for longs, liquidity engineering. So yeah, I hope you understood what I'm trying to illustrate here, and let's see how the market pans out. And for those in the signal group, you have already got your signal on this asset. Let's see how that pans out during the course of the day. So yeah, with that, guys, I wish you good luck and happy trading. Thank you.